Hello everyone and welcome to live stream of Paycheck or Options Paycheck. We will go through the markets and analyze the stocks, and we will also go through the trades that I want to plan for next week, and I will set the orders for Monday, and I will walk you through all the trades that I want to do on the stocks that I have. So first let's go to my Google Sheet where I have the stocks I want to trade. Um, what you see here is that I have Nvidia stocks, GameStop, Rivian, and Tesla. For Nvidia, GameStop, Rivian, and Tesla, I will be selling covered calls. And for Rivian, I'm also considering to sell cash covered puts. What we will do is look at the strike price, analyze the strike price that earns us enough premium, but also I don't want to necessarily sell the stocks that I own. So we will also consider so that the strike price is high enough that it's not in the money at the end of the week. This week, we have only weekly options. There are no monthlies, which drives the price higher. But what I will also do, and you will see it, I will use ChatGPT to consult what, based on the historic prices and based on the history chart, I will consult what is safe strike price so that we end up out of money and at the end of the week. So let's start, and I will need to log in to my brokerage account again. So let's let's wait for this. They have very good security, so they are uh, disconnecting disconnecting you after a couple of minutes of inactivity. So just give me a few seconds. So now all should be settled, and we can start. So let's have a look on Nvidia first. I will open trading view chart. Nvidia. So we can see the price was $94 at the end of Friday. Right now, I cannot consider pre-market, so I will plan the trades based on based on the price at the end of the day on Friday. So what I want to do is I want to use ChatGPT to help me actually analyze the price movements and what I can expect uh, in the upcoming week. So I took a screenshot of TradingView. I have here RSI and MACD. And what I will do is I will start asking ChatGPT. So first I will attach the screenshot, then copy copy this prompt. So considering NVIDIA historical price movements, what is a safe percentage range about the current price for selling weekly call options to avoid them going in the money? Please factor in RSI levels, typical weekly moves, and whether it's the week of monthly option expiration. Clearly state the recommended safe percentage and explain your reasoning. So I want to know what are the reasons actually for the price range it will provide, and I also want that it considers few additional technical analysis um, elements, specifically RSI and the chart. And so let's start the prompt. Seems to be pretty slow, but yeah, demonstrated volatility. Of course, what we can do is we can meanwhile check the volatility in the options. 78%. It's quite significant for NVIDIA. And also let's check the price. So my buy price purchase price was $115. Um, so to not sell in the loss, I would normally use this price range. But let's see what ChatGPT will suggest as a price range based on the historical data. Recommended safe percentage 8 to 10%. Advisable around 105, 108. Final recommendation deeply oversold. So actually, yeah. Well, it's not deeply oversold, but yeah, it's in oversold territory. It can start bouncing back. Yeah, that's true. Um, Around 15% above current price, 108 would be prudent. This balance controlling premiums, managing the risk of sharp short-term rebounds of Nvidia stock price. Right. So consider let's consider price of 110 maybe would be somewhere here. I hope the chart will be saved like this. Should be. It should keep it there. And yeah, so this sounds like a reasonable price. And let's let's see what would be the premium. $34. So what I will do is say strike price 110. And for this strike price, I want to put here the premium, and it was $34. And let me just copy these formulas. In the gray fields, I have formulas. So let's Let's copy the formulas. They should be everywhere. And of course, for some columns, I'm using Google Finance uh, and it's calculated field from Google Finance data, like closing Monday open, strike Monday open. Uh, See, so these data I will not have available, but it doesn't matter because what in the end what we want to know is what is percentage of option profit uh, per year if if I had this return on my capital. So with $34, yearly return would be 18%, which is not bad for Nvidia. And considering that is also quite safe range, um, I will plan the trade like this. So now let's move on to GameStop, and we will do the same approach actually. So again, let's search for GameStop. I I will take a screenshot again. Pretty, pretty sure I could automate it. Um, so that's work to be done. But for now, probably less work. For a few stocks, it's less work to do it manually. So again, I will put the chart and I'll copy the prompt. This might be way more interesting, uh, having in consideration the chart and how volatile this stock can be from time to time. So let's see. I mean, the purchase price I have is somewhere around $31. And so specifically for this one, I might actually go for $31 regardless of the recommendation because because it can be quite wild when this stock start to move aggressively up. So they recommended safe buffer between 12 and 15%. Given price $27 should provide adequate protection. 20, 29, all right, 30. Yeah. All right. So now let's have a look. Let's have a look. What are the options price for GameStop? And options. So we said $30. So there is an option chain. I will pick weeklies. So options that expire at the end of this week. And this is the strike price. So let's go a little bit below. We said $30. It is weekly and it is 32 dollars per one option. I I will probably do one more thing. What I want to check actually is option chain and see how many options uh, are planned actually for this week. And So what I use is option chart. Um, and I want to see actually if there is some high volume of options that could drive the price that could drive the price up. So where is it? Option charts. This interest, and then if I take weekly, monthly, and let's compare it with the monthlies. So if I apply, then there should be right. See, so this is monthly, uh, and here, so in June 2025, in approximately 2 months, there will be considered amount of monthlies, and also the same actually for weeklies in 2 weeks, but this week it seems to be still quite reasonable, so it shouldn't be so volatile. However, this could already drive the price up. Let me have a look actually what are the prices for the next. So I want to see the prices for April 11 and April 17. Um, right, yeah, 30 and then 35, 40, 50. I wouldn't be so worried about this. 25, it's not in the money, so it will not drive the options. Yeah, I think $30 is a quite safe strike price, because this will not drive the options so much up, um, and even if it goes up, then $30 is the strike price where the most volume is. So I would pick $30. So we said it's $32 per one option, and we want to sell two options. So let me go back here. Strike $30. We will have two options minus, as I'm putting there minus 32, minus is because I'm selling, so I'm getting premium. This I'm using this Excel, this Google Sheet also sometimes for buying options. So when I would be buying options, then I would put here positive number. But as I'm selling, it's minus 32. Fee I will know only when I actually sell. So when the trade will be opened. And now let me actually again copy this data, and let's see. It's very nice. It's 71% return. That's really nice. So what is the, yeah, it's driven by IV. It's very high. It's over 100%. And you saw for Nvidia it was 78%. Yeah, obviously for GameStop it's way higher, and that's why you can see it even with the strike price that is so much, it's so high, and so far away from the current price. Um, it is you can gain very high premium. What is current price? Yeah, all right. So the current price I put here, right? So this is a little bit of estimate. You don't have here the pre-market is not considered, and I mean it's a little bit difficult to estimate what will be really the opening price. But for the initial setup of trades, we can consider the closing price on Friday. So yeah, um, let's plan for these trades. So I'm selling two options for the covered calls for GameStop strike price of 30, order limit price 9 2 time good will cancel and preview. So even here I have commissions and fees. They can range between half a dollar and $2.50, and I'm submitting the sell. Okay, done. Right. So once one trade is captured, I think I didn't capture the trade for NVIDIA, right? Yes, for NVIDIA I didn't do so. So let's go to options. Okay. And what was the plan? The plan was 110 strike price. So let's finish this trade as well. Let's plan this trade as well. There we have we can sell one option, one covered call. Uh, so let's do it as well. Limit good till cancel 0.34 and sell sell accept. It might be actually uh, it might be that if the price at the time of opening will be different, there for sure the price, the premium will be different as well. And with the limit, it might be that the trades will not be executed, but we will see. It's good to plan it in advance, and then we will see what will be the situation. All right, so now let's have a look on a Rivian. Rivian is a play um, where I expect that this stock can 5 times or 10 times in the next 2 years as they are ramping up R2 and R3 cars. We might see really, really high multiple for this stock. So I want to keep the stock, but also earn a little bit of premium. It's not very likely that the stock will go without any news, without any catalyst, that it will go widely up. But let's take again screenshot and let's consult with ChatGPT. What would be the suggested safe range for selling the option? So again, let's take it like this and we'll use the same prompt. I would go I would go somewhere around 13 or 14, maybe 1350. 1350 might be somewhere here. Usually I consider for most of the stocks 20%, even for volatile, 20% quite safe range. If there is no news or earnings or any other catalyst, monthly options can be catalyst as well. So uh, this price range would be quite nice, but let's see what GPT is saying. Strikes around 13. Undercurrent balance aside around 10%. All right. Yeah. So shall we go for 13? Can go for 13 probably. I have 200 stocks, so I could be selling two for 13. The premium would be um 14 cents, which is not bad if you consider price actually. So look, uh, the price is half of the uh, half of yeah, it's half of the GameStop. It's even less for Nvidia, right? In comparison. So let me just copy over these calculations, and we will see again for Rivian 65% is return on from the premiums on the capital invested. That's really nice. That's really nice premium. Um, it doesn't look so much, but I have invested $2,200. So for that, it's really yeah, it's really nice. So now I will execute or I will plan the trade. Okay, it's for two actually. It's for two. So for one, it would be only 7 cents. So then it actually changes the situation a little. So then it's 32%. It's still above the threshold that I usually that I have for the returns. I aim for 30% yearly, so it means that some actually go above and some go below. So that's 32% is very nice, considering also that we will be in the safe range. So I can plan this trade. So order. Yeah, so this basically says that the price will be probably uh, different on Monday when the market opens. and the price will be actually significantly lower. Let's see, because when the market opens, there are wild moves usually. So we will see. We will see. Maybe it gets executed. Maybe we will need to wait few hours, maybe few days. But I think it's all right to plan the trades like this. So then for Rivian, the I would like to sell also some puts, and because this week I also want to start buying some additional stocks as the market went down. I will sell puts for maybe $5,000. So let's see what would be reasonable strike price. I would actually love to have Rivian uh, for price of $9.50. Um, maybe five. Yeah, five options seems to be like a good approach, considering that then I would still have approximately 6,000 for additional investments. Um, all right. So the price is 9.5. The strike is 9.5 and 10 cents the premium. So let's turn it like this. I was saying it will be five options only. It will be 10 cents. So what is the percent? All right. So the return on capital is 46% for this option. Hmm. I'm thinking whether we should consider maybe even better premium. Let's have a look actually here. Um, what is currently so 1 year price target is 14 or 15 almost. Um, yeah, and also what is this? It is 10. Yeah, there is support, right? Looks like it's what? Hmm. Hmm. 1050, 10, 950. This is what? 950. Tuesday, Friday, after earnings. Huh. I wonder. I wonder. Well, shall we try this? Hmm. Maybe. Maybe. Yeah. Let's try strike price of 10 and let's have 5. 16. So cancel, sell, accept, accept, done. Right. This looks good. And now let's go for Tesla. So for Tesla, last week I didn't, when I was rolling the option, I didn't recognize actually that I rolled the options to $285, but to this week. So I can sell only one covered call, and we will do the same approach again. Let's have a look for what is the safe range. But here I have quite strong opinion that I don't want to sell below 300 or maybe even 320. So let's still keep the same process, right? Let's still do the same approach. I will put the chart, and then I will ask same prompt. So if I do 20%, it's maybe plus 50, 290, yeah, yeah, somewhere here, somewhere here. Let's see. It might be actually that there is range where it will now be fluctuating, right? It can really be that there will be this range where it will just stabilize for a bit and then break out in one or the other direction. Let's have a look. Yeah, strike around 280. Final recommendations. Yeah, around 80%. Yeah, all right, around 80%. But as I was saying, right? So I have one for 285. The other, I will definitely, I will definitely open for 300. So the premium is not so high, but I just want to be on the safe side. And so let's see what will be the premium. I will earn $247 this week, considering yeah that this option was sold actually for 2 weeks. But altogether the profit for 2 weeks would be $926. It's not bad. It's not bad. Uh, and yeah, I mean, return on the capital would be 45,000. Is capital, is this? Yeah, okay. I mean, approximately 45,000, right? And what is this? X26, X26, T25, T20. Yeah. Well, it's not 25. What I can do, I will need to update the formulas, but what I will do is for now 247, 250. It's very approximate. Wow, of course, of course. 26. Yeah. So this week I would be getting 28% on the capital, which is not bad. I Yeah, which is not bad. It's close to 30%. The market is quite down nowadays, so I need to have a margin of safety, which is quite far for many stocks, and also it's very close actually to 30%. And if you consider the 2 weeks together, uh, if you consider 2 weeks together, then the return is really nice. Yeah. All right. So the trades are planned. No, so this Tesla trade I still need to finish. So one sell covered call April 11 300. Yes. Hmm. Actually, let's check also option chain open interest for Tesla. That would be that would be interesting thing to see as well. And if I compare to monthlies, monthly, no monthly here, all right, and uh, interesting, interesting. So let's take 11 and then 16. No, yeah, this apply, yeah, all right. It looks, it looks all right. It looks all right. Next week, there might be some interesting moves, but for this week, it seems to be. This is not Tesla, right? Tesla. Yeah, all right. So I was looking at the different stock, and so let's have a look again. And I was wondering, right, why actually there is so many options, because normally you have every week something. So it was very strange, but then only afterwards I realized it's different. It's different stock. Yeah. So let's have next 2 weeks and then monthly so that we can compare. Um, yeah, this week it's nothing crazy, right? It's nothing crazy. Next week actually. It's interesting. What is going to happen next week? What is going to happen next week so that so often, it's so high, and I want to check because the calendar. Hmm, is it third week or yeah? No, it's week. It shouldn't be monthly, or is it? Maybe it's monthly actually, and it just doesn't show. I will check on my phone the calendar, and I think it's third Friday in a week, right? So first, second, yeah, all right, yeah, it's third Friday in a week is monthlies, and so it will be April 17th. Yeah, so actually this, even though it says weeklies, it will be monthlies. Yeah, so that makes sense. Next week actually we will need to be very very careful with the margin of safety, and we will plan further away the strike price from the current price. All right. So what was the price that we were planning for? 55 cents. Let me put here 55 cents. Again, good will cancel. Strike price 300, April 11, selling. All right. Sell order, accept. Done. All right. So the trades, 5 trades, the trades are planned. Um, and we will need to wait actually for the pre-market, see the prices, and then of course opening the market and see how the trades will be executed. Then I will update with the fees as well, and yeah, we will see what will be the situation. Maybe some of the trades will not be executed, some of the trades will be executed. For some, the premium might be better. For all options, I have set limit price, so the price will not be worse than what is planned here, but it might be that it's better, or the trades will not be executed. All right, with that, let's wait for the market open. It will be super interesting again, and I'm excited with the trades that I have planned, and I'm looking forward for the market open. With that, have a nice day, and see you soon with my next options paycheck live. Please subscribe. Please like if you like the video, and see you soon. Bye bye.